Income from profession. Section 2, subsection 36 define. Profession meaning. Profession involves occupation requiring purely intellectual or manual skill. It implies a professed attainment in special knowledge as distinguished from mere skill, like doctor, engineers, lawyers, chartered accountants, musician, etc. Normally, they may maintain only receipts and payments account. Specified professionals are those persons who carry profession in law, medicine, engineering, architecture, accountancy, company secretary, technical consultancy, interior decoration, film artists like actor, cameraman, directors, music directors, art directors, singers, story writers, and costume designers. Non-specified professionals refer to all other professionals who are not included in specified professionals. Example, carpenter, painter, electricians, or comes under non-specified professionals. Okay, now let me see how to compute income from profession. Actually, it is quite opposite to income from business. While computing income from business, we will take net profit, add disallowed expenses, which are all not adopted under the business entity concept. We will add that one and less income chargeable other rates. But here we have to take only their professional income, and with that income we have to deduct their professional expenses and depreciation under section 32 of the IT Act. Okay, first step, we have to consider only the professional incomes of the persons. Fees from the client, not customer, client, and patients for doctors. Okay, and presents from clients. Other professional based receipts. First of all, we have to take these things as a professional income. In that, less professional expenses and depreciation under section 32 of the IT Act. What are they? Salary to staff, office rent, interest on loan for profession, general office and administration expenses, and depreciation on assets used for their profession. So balance is income from profession. So professional fees like legal fee for lawyers, consulting fee, visiting fee, surgical fee, sale of medicine for doctors, audit fee, tax consulting fee, case hearing fee for auditors, etc., etc. While studying income from profession, we must understand the concept of the depreciation under section 32 of the IT Act 1961. See the first provision. No depreciation be charged on the asset which is sold during the previous year. Second one, 100% cost of the asset was allowed as depreciation when cost not exceed 10,000 in case of new asset. Third one, if the cost exceeds rupees 10,000, asset type and the rate of depreciation IT Act. Furniture and fittings 10%, buildings 10%. Here one loop is there. 40% for temporary sheds or building. Machinery and equipment 15%. For machinery and equipment, we can charge 20% additional depreciation extra. Motor car and vehicle 15%. When the motor car or vehicle purchased during in between the period of 23rd August 2019 to 31st March 2020, we can apply 30% rate. Computers, laptop and hardware 40%. Books, annual publications 100%. Books for professionals 40%. Patent right, copyright and know-how 25%. For surgical equipments 40%. For commercial vehicles, that means those who are doing business with vehicles, yellow board, travels board, they can adopt 30%. One loop is there, 45% when this vehicle acquired between 23rd August 2019 to 31st March 2020. These are all the important rates prescribed for the students' purposes. Okay. When the asset used less than 180 days during the previous year, only 50% of the above said rate allowed as depreciation. And the last one, block of assets. What is block of assets? Grouping the assets which were falling under same rate of depreciation. So 10% items will be called block 1, 15% items be called block 2, and 25% items be called block 3, like that. Note, if the asset is purchased and the payment made in the mode of cash means no depreciation is allowed on that asset. And another is for the profession holders, when books of accounts are maintained under cash basis, opening stock and closing stock be ignored. When books of accounts are maintained under the mercantile basis or mixed basis, cash and mercantile basis, opening stock and closing stock be adjusted with purchases. Okay, now let me see practice 1. How to compute income from profession of doctor professionals. Dr. Ganapati furnishes the following particulars of his professional receipts and payments. See, it is just a cash book. It starts with the opening cash balance and ended by the closing cash. Here all the receipts will be there, capital receipts and the revenue receipts. Here also all the payments, capital payments and the revenue payments will be there. We have to concentrate only their professional income in the receipt side and the professional expenditure in the payment side and depreciation on the assets. That's all. What are the adjustments? Gift and present include 4,000 received from relatives. Okay. Depreciation on furniture, depreciation on equipment is 40%. Only 2 information. How to compute? Let me start the answer. Computation of taxable income of Dr. Ganapati. First, we have to consider the professional income. Then we go for the receipt side of the cash book. Opening balance brought means opening cash balance. It is not an income. Next one, consulting fee. As a doctor, consulting fee is professional income, 2,40,000. Second one, visiting fee. As a doctor, visiting fee also is professional income. Gift and presents, totally 24,000, out of which 4,000 received from the relatives. So balance 20,000 only from the patients. Okay. Next one, rent from property. It will be taxable only on income from house property, but not under income from profession. So we have to govern only these 3 informations. Okay. Less professional expenses under depreciation. What are the expenses? Staff salary. It's a professional nature, so deduct it, 84,000. Next, rent of clinic, also professional nature. Surgical equipment, it is an asset, so we have to charge only depreciation on equipment. What is the rate given? 40%. So depreciation on equipment, 40%. Only allowed as expenditure. Purchase of medicine, as a doctor, purchase of medicine is professional expenditure, so deduct it. Next one, personal expenses. It will not appear. We have to concentrate only the professional expenditure only, but not personal. We don't want this one. Ignore. Next, interest on loan. 24,000. Nothing was given here. Whether loan taken for his professional use or for his personal use, nothing was given in the information. So we assumed that interest was taken only for his profession. So interest on that loan be treated as professional nature expenditure. So the total professional income was 3,40,000. Total professional expenses was 2,48,000. Balance 92,000. Dr. Ganapati's professional income for this accounting year. In the same pattern, the listeners can practice exercise 1. Now, let me go for practice 2. Dr. Dharman furnishes the following particulars of his professional receipts and payments. Receipts, 2 balance brought down. That means opening cash balance. Consulting fee, visiting fee, gift and presents, rent from property, sale of medicine. Okay. Here, rent from property is not professional income. Other consulting fee, visiting fee, gift and presents, sale of medicine, other professional income. Okay, let's keep in mind. Now, payment side, staff salary, rent of clinic, computer is an asset. So we have to charge only depreciation on computer. For computer, normally 40% will be the rate of depreciation. We have to charge on that. Purchase of medicine, personal expenses, this should be ignored. Interest on loan, it was given very clearly personal purposes. So this should be ignored. Gift to wife, this should be ignored. Car expenses, the proportionate use of the car for his professional will be considered. See the adjustments. Gift and present include 20,000 received from father on birthday. So out of 80,000, 20,000 received from his father. Balance 60,000 only received from his patients for the appreciation of his professional services. Only 60,000 be treated as a professional income. Okay. Depreciation on computer is 40%. We already covered that. 50% of the car used for his personal use. So in the car expenses 80,000, 40,000 personal nature, that should be ignored. Balance 40,000 for his professional use, that should be adjusted with the professional income. Let me start the answer. Professional incomes, as a doctor, consulting fee 5 lakh 40, visiting fee 2 lakh 20 was fully taxable. Next, gift and presents, total gift 80,000, out of which 20,000 received from his father. So balance 60,000 only is professional income. Next one is sale of medicine. Only 4 items are their professional income. Less professional expenses and depreciation. See, salary, rent of clinic, these two were professional expenditure. Next, computer, it is an asset, so we have to charge depreciation on computer 40%. Next, purchase of medicine 1 lakh 40, it is also professional nature expenditure of doctor. Next, personal expenses ignored, interest on loan for personal use ignored, gift to wife personal ignored, car expenses 50% of the car only used for his professional use, only 50%. So his total professional income was 9,96,000. Total professional expenditure 7,56,000. Balance 2,40,000 was his taxable income from profession. In the same pattern, the listeners can practice exercise 2. Now let me go for practice 3. Dr. Raghavan, well-renowned medical practitioner, furnishes the following particulars of his receipts and payments for this accounting year. See, in this problem, balance button opening cash. Fees from client, it was given 3 years. Previous year, current year, in the next year. Actually, it is on cash basis because we maintain only the cash book. So the total receipts during this year, 5,48,000, will be treated as is a professional income of this year. Okay. Next, gift from mother, life policy maturity, presents from patient, sale of medicines, loan from friend for purchase of medical equipment. Here payment side, staff salary, rent of clinics. Staff salary was also given 2 years. Previous year outstanding and this year. Totally paid 2,50,000 during this year. The entire 2,50,000 be treated as current year expenditure. Rent of clinic or expense, purchase of medicine, LIC premium, it's a personal nature. Interest on loan, nothing was given, whether personal or professional. So we can treat it as a professional nature. Gift to wife is a personal. General expenses, it is a professional nature. Traveling, also professional. Surgical equipment, we have to charge depreciation at 40% for surgical equipments. Adjustments, opening stock of medicine was 20 and the closing stock of medicine was 45,000. Actually, in the question itself, it was given cash book. So the books of accounts are maintained under cash basis. So opening stock and the closing stock will be ignored. Next, car, which is partly 60% used for its professional use. Car, any car expense is the 36,000. Out of 36,000, 60% only treat as his professional use. Okay, balance 40 will be ignored. General expense include 12,000 for purchase of professional books. General expense how much? Totally 60,000. That 60,000 includes purchase of professional books 12,000. Actually, for the professional books we can charge only depreciation at 40%. Okay, right. So we start the answer. First of all, we have to consider the professional income. Fees from the patients 5,48,000 fully taxable. And the gift from mother ignored. Life policy maturity ignored. Presents from patients 40,000 fully taxable under professional income. Next is sale of medicine 2 lakh. Next, loan from friend. It is a capital receipts. It is a liability. It is not an income. It is not an income. So leave it. So totally 7,88,000 was his professional income. Less professional expenses and depreciation. Staff salary 2,50,000. Rent of clinic 72,000. Both will be adjusted. Core expenses only 60% was given adjustment for his professional use. So only 60% we have to adjust with income. Next, purchase of medicine 2,40,000. It is professional nature. Next, LIC premium personal, leave it. Interest on loan 12,000. It's a professional nature. Nothing was given adjustment. Gift to wife, it's a personal. General expenses 60,000. It's a professional nature. In that, 12,000 was used for purchase of books. So 48,000 only be accounted as a general expenses. On the depreciation on books, 12,000 to 40%, 4,800 only allowed as a professional expenditure. Next, traveling expenses, 24,000 allowed as a professional nature. Surgical equipment, 1,50,000. We have to charge 40% depreciation on 1,50,000. So the total professional income will be 7,88,000. Total professional expenses will be 7,32,400. Balance 55,400 will be taxable income from profession of Dr. Raghavan. In the same pattern, the listeners can practice exercise 3. Now shall we go for practice 4? Actually, in the past 3 problems are in the question itself, it was given receipts and the payment account. But in this problem, practice 4, from the following statement, compute income from profession of Dr. K. Khan with the following adjustments. Actually, he submitted income and expenditure account. So, actually, the receipts and the payments account normally starts with the opening cash balance and ended with the closing cash balance. But the income and expenditure account normally closed by surplus or shortage. Okay, it is not income from business, it is income from profession. So we should care only their professional income and their professional expenditure and depreciation only. Okay, let me see. The income side, visiting fee, consulting fee, sale of medicine, dividend. As a doctor, professionals, visiting fee, professional income, consulting fee, professional income, sale of medicine, professional income, dividend was taxable and income from other sources. So only these 3. Take it as income. Less professional expenses and depreciation. First, we have to go to adjustments. Electricity charges includes domestic bill of 2,500. How much electricity charges? 6,000. Out of 6,000, 2,500 is a personal nature. Balance 3,500 only is professional nature. That should be deductible. Next, half of the car expenses are for personal use. How much car expenses? 9,600. 50% only applicable as a professional nature. That should be deductible. Next, depreciation on car 4,800. In that also 50%. Next, telephone expenditure include 40% for personal use. So balance 60% only for his professional use. How much? Total amount 6,000. 6,000 to 60% only professional use. So all the adjustments we covered. Now shall we go for the debit side? Dispensary rent, it's a professional. Electricity charges and a cell phone already we governed. Dispensary rent 36,000. Next, one more adjustment is there. Opening stock of medicine was 6,000. The closing stock was 4,000. So here income and expenditure account was prepared. When this income and expenditure along with any information about opening stock and closing stock, that should be adjusted with the purchase of medicine. How much purchase of medicine? 36,000. Add opening stock 6,000, less closing stock 4,000, balance 38,000 is called consumption of medicine. Normally, when the books of accounts are maintained on a cash basis, means opening stock and closing stock will be ignored. But in this problem, income and expenditure account was given. So, opening stock and the closing stock will be adjusted with the purchases of medicine. He is a doctor. So, we have to adjust with medicines. Next one. Dispensary rent already allowed. Salary to nurse 36,000, also professional nature. Next, purchase of medicine government. Depreciation on X-ray machine 4,000, also professional nature. Next, income tax personal nature, leave it. Donation personal, leave it. Car expenses and depreciation on car already we adjusted. So the total professional incomes will be 2,42,000. Professional expenditure 134,300. So balance 1,07,700 will be taxable income from profession. So in the same pattern, the listeners can practice exercise 4 for their easy understandings of computing income from profession. Okay, we'll see in the next video advanced problems.